We are half an hour away from the opening bell. Hong Kong, Shanghai, and Shenzhen. You're watching the China Show. I'm David Ingles with Annabelle Droulers.
Our top stories. Asian stocks rise after Wall Street hits a fresh record high with weaker than expected economic data, supporting the case for Fed rate cuts this year.
President Biden wins the backing of Democratic governors after a White House crisis meeting as party pressure mounts to abandon his re-election bid.
And Xi Jinping says China is on the right side of history on Ukraine during talks with Russia's Vladimir Putin. We hear exclusively from Ukrainian President Volodymyr Zelenskiy. All right, there is certainly a lot of election uncertainty in the air as we kick off another trading day here in Asia. But this amount of green on the screen certainly tells us that there's that expectation for the Fed, those expectations around rate cuts later this year. That's certainly in the driving seat for the session today because broadly you've got equities here all moving higher across the board. Wall Street may have kicked off or ended the day early for the June 4 holiday, but still not without or not before touching a fresh record high. That's translating across the session today. You've got the topics, for instance, in Japan trading above its previous high as well, that previous record closing high. What else we saw, of course, it was that story of bad economic news being good news. So we saw weakness coming through in the services sector, labour market weakness as well in the US, and again, bolstering the case for the Fed to cut rates later this year. Off the back of that, we saw a retreat in yields, again playing out in the session so far. No cash trading for treasuries at this point in time, but dollar softness as well. That plays out in the currency space in turn, watching as well. Japanese yen here has been just a little bit firmer, but fluctuating a bit. Expectations around what the BOJ as well does next. Golden Dragon Index to note as well, because we've got Hong Kong futures pointing to gains here. Overnight on Wall Street, the Golden Dragon Index posting its best day in about 2 months. The reasons for that, there are a couple of them. Some big gains in live streaming for gaming stocks in particular. Also, we saw some better than expected or better EV sales for Europe. So Chinese EV makers managing to hold on to their market share there, even with you've got the threat of tariffs just on the horizon. Taking a look as well at how China is positioning ahead of the open today. Hong Kong as well, notable to watch, given we could be heading into a fourth day of gains, Dave.
Yeah, and you know, when these markets get up and running in about 18 minutes from now, so we're up, 0.7% on the regional benchmark. I suppose and I suspect that we're going to get a further bump up across the regional benchmark. So, you know, the markets, as Bell was pointing out, that are coming online, you have Malaysia there. Singapore did very, very well yesterday. Australia's up 1%. You know, the Topix is at a record high, by the way, in case you missed that, just topping the highest since it topped the 1989 high. So the 50-day moving average, that's in focus today as we retest that as well. Live streaming shares on the back of the special dividend coming out of Douyu. So Douyu and then Huya was the other stock that also moved quite substantially overnight. Lufax shares in focus. You have Ping An coming out and basically looking to increase their stake to now a majority, so about 57%, give or take. Maybe additional walls are being erected here against the CGB rally with, you know, our story that the PBOC has signed an agreement with the two big banks, the ICBC and Postal Savings Bank, to borrow CGBs, and of course the SEO meeting where the Chinese president Xi Jinping is set to speak as well. So there's a lot to keep in mind as we go into this trading session, and notwithstanding, of course, Bell, the softer dollar, the weak dollar, the rate cut expectations around, I think it's now almost 2 full cuts priced, and of course all the drama in Washington.
Drama in Washington is certainly really dominating for us this morning, I think, because we just heard from the Biden-Harris campaign as well, saying that President Biden is determined to beat Donald Trump at the ballot box. And that statement follows a crisis meeting at the White House where key Democratic governors also pledged support as the pressure, or the drumbeat of pressure on the president intensifies. Let's get more now with Jill Desis, our news desk editor, who has been following all of these developments for us. And I think the key question here really is, even if they come out and say that he's going to continue to fight, Is that really going to be enough to assuage the concern and all of these rumours that he could be considering stepping away?
Yeah, Belle, I think the fact that we're even in this situation right now just indicates how much of a crisis this has really become for a lot within the Democratic Party. I mean, we just talked about this crisis meeting at the White House involving several key stakeholders within the party, including prominent Democratic governors across the nation. This obviously all coming out of this incredibly dismal performance that Biden had in the presidential debate against Donald Trump last week. I mean, look, as of right now, you've got the White House saying he's staying in. You've got all of these governors emerging from this crisis meeting saying, you know, we stand by the president. But it's clear that there is still pressure mounting. This is a very quickly moving situation. You've got, we've reported that Democratic lawmakers are actually signing a petition suggesting that Biden should leave, clear the pathway for another nominee. This just kind of indicates that this pressure continues. We'll have to see how sustained it ends up being, but we're still, you know, we're about a week out from the debate and it doesn't really seem to be going away.
Yeah, is there a deadline or a soft deadline we're working around? You know, when do they need to decide who eventually runs?
So look, we're all building up to the Democratic National Convention. That's going to be happening about the third or so week of August. So there still is a bit of time. Remember, I mean, the Biden campaign agreed to the terms of moving this debate incredibly early, right? I mean, we had a debate at the end of June. This is incredibly unusual in the grand scheme of things. In previous election cycles, presidential election cycles, you've seen things happen much later in the campaign cycle. So ultimately, I mean, the fact that he's had such a poor debate performance, I mean, if the Democrats do decide to replace him as a candidate at the convention, they do still have quite a bit of time here. I think the question, though, is whether leaving that door open for as long as, the 6 weeks or so that it actually takes to build up to the national convention is a good idea. I mean, you don't really want to be sitting there for weeks on end debating whether or not the sitting president of the United States should still continue running for re-election.
Yeah, and so it certainly makes that window for the new candidate a lot shorter as well. What is so interesting about this whole thing as well is that Kamala Harris is now seen as perhaps the best chance of derailing Trump, and that is even more remarkable given she was the reason her unpopularity was why Biden was thinking he should stay in the race.
Yes, exactly. I mean, look, we wouldn't be in this situation, right, if technically you had a Democratic vice president that was more popular within the party, right? I mean, part of the initial thinking when they ran as this ticket back in 2020 was that you had potentially a younger vice presidential candidate who could step up. She's black and Asian, a woman, sort of first in this kind of position, really consolidating a lot of that Democratic base, but proved to be somewhat unpopular, especially during the first couple of years of this term on issues of immigration. There were some reports about, her staff being in somewhat of a disarray situation. I think her favorability has improved, certainly recently, particularly on reproductive rights involving women. You've had some recent polls that actually suggest that maybe she would do better in a general against Donald Trump than Joe Biden would. It's just, I think, really shows how much of a fast-moving situation this is, that this is, kind of the situation that the Democrats have found themselves in at this point.
Jill Deeses, thank you so much. Our news desk editor, as we were just pointing out there, equity markets in the region are at 2-year highs. VIX futures are actually not budging, given all this drama and uncertainty and all these headlines coming through out of Washington. Joining us here on set, Adrian Zuercher, CIO and head of global asset allocation at UBS Global Wealth Management. Adrian, there's a lot of drama, there's a lot of headlines, there's a lot of confusion, a lot of noise. How would you be advising, do we look through this near-term uncertainty?
Well, usually political stock market, they have very fast legs but very short legs. Maybe in the situation of the US election, it's a bit different. But what we try to do is we try to build strong portfolios. We try to be diversified. We try to build portfolios that can actually do well in all the situations. And of course, you're looking for some certain trades that maybe hedge some of this political risk. We just went overweight gold. We do think gold is an excellent hedge against the political uncertainties, against not just in the US, but also globally, Middle East, Russia. We see very strong structural trends. Central banks are buying, de-dollarization that is coming through. So gold definitely in a very sweet spot in this election. We're looking at the CNY, which looks very vulnerable from a structural perspective, and might be even more vulnerable if Trump gets elected, given tariffs and all the trade situations that we have.
So in that sort of environment, then, if you're seeing perhaps further downside pressure to come for the yuan, how are you sort of hedging against that?
So basically, we recommend to our clients to be short the CNY, hedging that, being long the US dollar. You get a positive carry. So there's a lot of factors that are coming through that. We still like the Chinese equity market, particularly at the moment. Going to third plenum, expectations are extremely low. It has been delayed for almost 6 months. The market has really low expectations going into that. We do think there will be no major policy announcement, but we will see more of what we have seen over the last couple of months, more support, more clarity on how do they want to destock some of the housing situation that they have. And that basically overall should be supportive for equity markets, at least for now. Going closer to the election, that's definitely something we have to reconsider.
Yeah, okay, well, let's wait until November to have that conversation. The news flow overnight was quite confusing because you did have, of course, the Fed minutes also coming through alongside all of this flurry of headlines. And is it Biden? Is it Harris? Is it Biden-Harris? Is the price action we're seeing today more reflective of this dovish tilt from the minutes from the Fed and the soft data that's come through out of the U.S.?
Well, I do think really from a portfolio standpoint, you should focus on macroeconomics, on earnings, and look at the political side in terms of having some hedges. And if I look at the macro picture, it's weakening, but more importantly, inflation is really coming off. We had a very weak or soft CPI for May. We had a soft PCE for May. We had a soft ISM price indicator for June. And we actually do see a mounting evidence that some of the idiosyncratic factors like car insurance is rolling over. Even on the housing side, we will get very strong base effects coming from June, July, August, and September. So I think the evidence is there. The Fed should actually cut interest rates. The Fed is still driving on a high end, looking in the rear mirror. And that's what they have done in 2021 and 2022. They were too late to hike. And now it almost looks like they're a bit too late to actually start to cut.
You're expecting the Fed to cut in September, but the market is trading, it's positive on the expectation we're going to get these cuts and the rationale's building for it. When do you think, though, that economic weakness in the US starts to then come across and feed into corporate earnings?
I think first we have sort of this Goldilocks scenarios. We still get 3 data of inflation, 3 data of job numbers. Who says that there's only a 25 basis point cut in September, knowing that there's no meeting in October, and then I think the FOMC meeting is right after the US election, so we'll see if they really want to cut then. So I do think that the market is underpricing currently some of these lower interest rates, and therefore I do think that's probably pushing up the fixed income market, but also the equity market. The evidence of slower growth at the beginning might be even something positive, will be a reflection of less wage growth, probably a deflationary pressure on some of the numbers we actually have seen. I do think going into next year, that's probably when the Fed have to become more supportive for growth and not just lowering interest rates to be sort of policy neutral.
Adrian, we'll have more from you, of course. Adrian Zuercher there will be rejoining us in a couple of minutes here as we talk through the sort of details of the outlook there out of the guys at UBS Global Wealth Management. Right, just kind of down to the open of trade. It's looking like a solid session is upon us, Shanghai, Shenzhen, and here in, by the way, an extremely... I have been melting this week.
Extremely hot. Extreme weather warning actually in place, I think, still.
Yeah, and we're not even into the thick of summer, as they say. Okay, 60 minutes away and the market is hot. We'll give it that. This is the China Show. Right, welcome back. So we are coming off quite a steep drop in your measures of the dollar, and the fix for today certainly reflects the absence of dollar strength, let's put it that way, at 713.05 against the U.S. dollar. There we go, on the midpoint.
Yeah, well, let's stick with the yuan, actually bring back in Adrian Zuercher. He is still with us, CIO and Head of Global Asset Allocation at UBS Global Wealth Management. And yuan weakness, how much further do you think that the officials in China would be willing to allow the currency to slide if it's done in a way that's considered to be managed as opposed to disorderly, especially as we approach the November election and the risk of more tariffs to come?
Look, policymakers are still bruised from 2015 and 16. I actually do think they should let it slide even much further. Should not forget the CNY depreciated versus US dollar, but actually appreciated versus a lot of G10 currencies this year as well. And these are export competitors as well, and also very important trading partners. So I think there's more room for devaluation for the CNY. If it's 7.4, 7.5, 7.6, that's where probably they become a bit more nervous. But overall, I think PBOC should actually cut interest rates. They should do more QE. They should cut interest rates and also do actually more active investments and increase liquidity. And we have seen only a part of that coming through, and it's probably not enough.
It's interesting how you phrase that QE, because they have been pushing back against this bond rally. And I'm wondering what you're advising your clients on CGB exposure.
Well, I still think this is a long position, being long duration CGBs. We'll try to stabilize it, but look at the structural challenges that China has. I don't think it doesn't make sense from a long-term perspective higher interest rates are coming through. Finally, at least we start to see that CPI is moving back. We have 4 months of positive data. PPI is still challenging, but I do think that's a positive sign, but it's still not enough. And the confidence is low, consumer confidence is low. It's lots of excess savings that can be activated, but what you really need is policy support.
So off the back of that, then, do you think that we could go even lower for bond yields in China?
It should be. We will see if the PBOC is really going that way in policymakers, but I think that will be the natural consequence out of it. And yeah, it should have lower rates.
And on the equity market, what we've seen in the last few weeks is divergence between onshore, which can't seem to find a floor, and it looks like we properly shifted to a higher trading range here in Hong Kong, at least. What's the advice on China equity exposure given that?
Look, I think tactically, Chinese equities look attractive. Expectations for the third plenum are really, really low, so positive news can come from there.
Right.
Everybody is chasing AI stocks. China still has relatively cheap AI stocks, very solid financed, there's a lot of cash, they can do buybacks. I think earnings growth is coming through as nominal GDP growth, at least in China, is actually accelerating now. So there's a lot of positive aspects. And then we should not forget, you have the financial sector, which really tries to return money to the investors. So dividend yields are around 8-9%. I think that's quite an attractive additional factor to invest into China. It's more tactically, and I will be positioned for these earnings seasons because I do think that the earnings are coming through. They're more positive news. I said there's a political headwind that is coming through over the next couple of months,
right,
and then you will have to reposition.
Well, let me ask you directly. Second half of the year from now, it's easy tactical, right? What outperforms more, China or the U.S. or Japan?
Well, I would rather say AI is still performing going in this selection,
Okay.
and if it's a global
Right.
phenomenon, because it's still carrying this rally. There's a lot of capex going through. There's very little revenues at this point, but the market is looking through that. They can actually accept some delay on these revenues coming through. It's about investment, and it's where the money is flowing, and that's in AI.
Is there, though, another market outside of China in this region that looks equally attractive then to you?
I think we have Korea, for example, which looks attractive, which actually also has lagged this AI story and has very exposed. It's a global market that is related to exports. I do think that global growth is slowing, but it's not flowing into a recession, and therefore Korea actually at this point quite an attractive market.
Just a final question. We woke up this morning to two things as well, right? A record high in U.S. equity markets and an all-time high in assets under cash, and I'm trying to get my head around that and how those two things can coexist. Are you getting more queries on cash, and are you having to push back on cash strategies at the moment?
Well, we still see a lot of flows into cash,
right,
and we actually advise our clients to start to going back. And we start to see people moving cash into fixed income, probably not at the pace we actually would recommend. We actually think you should be long duration, you should add duration in the portfolio. I do think these high interest rates will come to an end. Fed cuts are coming through. We see other central banks, of course, cutting already, and therefore moving cash into it. But it's exactly this cash on pilot actually is on the side. That should stabilize market. If there's weakness coming through, for whatever reason, there are buyers into that, people that want to go back into the equity market and people that want to go back into fixed income market. And therefore, I think the second half should be quite positive.
Adrian, we'll probably don't see you before the weekend. Have a great weekend ahead. Keep cool. You know, the weather out there sounds bullish there. Adrian Zuercher, CIO, Head of Global Asset Allocation at UBS Global Wealth Management, as Adrian was just pointing out there as well. So it is an up arrow story. HS Tech Index, 0.7% on the regional benchmark. We're up 2% now in the early goings here in Hong Kong. A full preview of the trading day ahead. This is Bloomberg.
Welcome back to the China Show. Russian President Vladimir Putin has met with China's Xi Jinping for the second time in 2 months. Putin told the Shanghai Cooperation Organization summit in Kazakhstan that ties between the two nations are at their best in history. Xi, meanwhile, defended China's role in Ukraine and vowed to deepen coordination with Russia. Let's hear from both leaders.
In the face of the turbulent international situation and external environment, the two sides should continue to uphold the original intention of generational friendship, adhere to the perseverance of benefiting the people, continue to cultivate unique value of Sino-Russian relations, explore the endogenous motivation for cooperation between the two countries, and make efforts to safeguard the legitimate rights and interests of the two countries and safeguard the basic principles of international relations.
Russian-Chinese relations of comprehensive partnership and strategic interaction are experiencing the best period in their history. They are built on the principles of equality, mutual benefit, and respect for each other's sovereignty. Our cooperation is not directed against anyone. We do not create any blocs or alliances. We simply act in the interests of our peoples.
Right, going into the opening bell, so there's geopolitics in focus. The president is speaking, of course, there at the SCO. The premier is speaking, in fact, at the other conference, the AI conference that's taking place onshore. We are poised for a higher open, north of 18,000, 50-day moving average. We're retesting that again. We'll see if we close above that on the Hang Seng China index. And just very quickly, in case you missed it, about an hour back, Hong Kong PMIs were out, and a third month of declines. And on an absolute basis, we've hit the lowest going back to about the mid part of 2022, Bell.
Yeah, and a couple of stocks to watch at the open as well. We've got Lufax here slipping, but it has just come off a more than 30% surge over the past couple of days. Ping An's group is taking a bigger stake in the company, rising to more than 55%, up from just over 40%. And also watching Chinese EV stocks, better sales numbers in Europe, so holding on to their market share. More ahead. This is Bloomberg. Welcome back. You're watching the China Show, and we're counting down to the open of mainland markets. Also, Hong Kong set for a fourth day of gains. The Hang Seng there you can see. But the story, well, there's a lot of different things we're tracking, Dave, today in the session. You've got election uncertainty, of course, hanging over it. But the market is really just telling us that it's more focused on what the Fed does next, when we're going to see those cuts coming through.
Yeah, almost 2 cuts are fully priced by the end of this year, and certainly the data that's come through this week, and arguably overshadowed by all the drama out of Washington, has really been on the softer side, right? Whether that's the jobs numbers, the ISM overnight, the drop in the U.S. dollar, the Fed minutes that came through as well were really more on the dovish side, despite the fact that, of course, you did have the dots too, saying the opposite. But when you look at markets, they're simply taking that as a more dovish and sort of this pivot back into risk assets. The open in Hong Kong and also in mainland China, it's worth keeping in mind. Across the region, we're looking at effectively a sea of green out there. The Topics Index just topped its highest ever. We'll see whether or not we close above that. We're at 2-year highs on the regional benchmark, 0.3% to the upside on the CSI 300. On the China story, and as you can see, yields are picking up as well. Sources have told Bloomberg that the PBOC is tapping, in fact, might have even signed an agreement with some of the big banks, at least what we know based on our reporting, is you have ICBC and Postal Savings Bank to borrow some inventory of CGBs in the event that they need to smoothen some of these flows into the CGB space as well. So that's another story. We can talk more about that in a moment. Let's flip the boards, please, if we can. Have a look at Hong Kong. It's tech, really, where you are seeing the biggest move right now. 2% to the upside. On the Hang Seng China Index, we're right above, as we speak, I believe, at about 64.87, the 50-day moving average, which we fell below. We sort of failed to move beyond that last couple of days or so. It looks like the winds are strong enough today for a close above it. We'll see. We'll see what happens. Tencent's up 1.4%, Alibaba 1.7%, to my point there on this big move in tech. Also overnight, keep in mind, right, and as we flip the boards, Hong Kong PMI's 2-year low. Massive move up in the Golden Dragon Index up overnight. Best day in 2 months, 3.3%. Douyin and Huya, some of these live streaming, with a focus on gaming to be more specific. Massive special dividend there, which is why we're looking at some of perhaps the related stocks like Bilibili, 3.5% to the upside there as well. Leaning, the chairman, I believe, the news story here is looking to increase its stake in the company. Lufax, as we talked about these last few days or so, Ping An is increasing its stake there. Big move up in the last couple of days or so. We are pulling back a little bit. When I say big, really big, 25, 30% move. Very, very quickly, we are also getting a big move to the upside here on these EVs. We'll talk more about this on the other side of some breaking news coming out in a couple of seconds here. But as you can see, substantial moves out of XPeng, 8% move. And, you are seeing effectively that move up across the sector here, Bill.
Yeah, we're going to get more on the EV sector in China. Tariff risk as well in just a moment. We've got Bill Russo from Automobility. But let's talk about as well some data just dropping. It's the Australia trade numbers for the month of May. We've actually seen the trade surplus narrowing to $5.7 or $5.8 billion. So the estimate had been for $6.3 billion instead. We've also seen a revision downward for the April numbers as well. But the imports, we saw those rising 3.9% on the month. Exports up 2.8% as well. But as we said, that narrowing in the trade surplus, it's a bit unsurprising. Perhaps Australia is, of course, a big exporter of resource and agricultural commodities. During the month of May, we did see that really big pullback in global commodity prices. So quite a volatile data set.
Yeah, and it is, of course, measured in dollar terms, which is why you have this, of course, there. Right. Now, as Belle was mentioning earlier on, so this conversation around Chinese EVs, tariffs and everything else, right? So when you look at some of the data that's come through, some of these EV brands have actually held on to their market share in the slumping EV market in Europe. This is for the month of May, to be more specific. So this is really ahead of the new tariffs designed to really protect local companies. The numbers from research from Data4 show that Chinese car makers had an 8.7% share of the market, on par effectively with about a year ago. Now, Chinese firms have put pressure on European counterparts with new and cheaper models. Total deliveries fell 12% during the month, reflecting softer demand for the overall market in Europe. Let's talk about how the story evolves moving forward, the politics, the economics, and the commercial side. Joining us now is Bill Russo, founder and CEO of Shanghai-based investment advisory firm Automobility. Bill, as always, a pleasure to have you on the show. Why don't we start there in Europe? And, we're looking at this wall of tariffs that could come into play. Where do you think tariffs eventually end up?
Yeah, I think this is a move on the chessboard. China is now the world's largest, not only the largest car market, it's the world's largest exporter. 1 out of every 5 cars made in China is actually leaving the country and being sold elsewhere. And obviously, big markets like EU are a target for China to grow into the regions of the world. And governments that represent countries that have an industrial base in automotive are moving to protect by erecting these tariffs. But what's interesting about the European action is it's only on battery electric vehicles. China actually exports far more gasoline-powered vehicles to other markets than they do EVs. And there's a significant component of exports from China that are actually made by multinational companies like Tesla, like BMW, like Renault. So they didn't put up a wall to keep it out entirely. I think it's actually a positional move to get some of the production in China moved closer to the European Union.
Yeah, and do you think then that means it's the best case for Chinese EV makers to avoid tariffs in Europe? I mean, we've already seen the likes of BYD, CATL, for instance, setting up capacity in Europe. Is that the strategy that's going to work moving forward?
Yeah, well, first of all, I think the European region, being also very interested in important part of its industrial base is automotive. If the world is prioritizing electrification, right now you need China to democratize the EV. That's what it's done here in China. And electric vehicles represent more than a third of the market here in China. European companies are very much dependent on the supply chain from China. So CATL, BYD are the two largest EV battery makers in the world. They need some of the investments to come into the European Union to secure the supply chain, in particular for the batteries.
Yeah, and Bill, just to follow up on Bell's question there on increased capacity in Europe from Chinese EV names. I mean, you're on the ground in Shanghai. Is there a sense that that is the direction that other car makers and other parts of this value chain are looking to follow? More capacity, more capex in Europe?
Only if there's significant demand, right? We're looking at a market for expansion. You're not going to put up a factory unless you've proven that there's enough demand for your products. And there's only a handful of companies that have reached that point. And it's very clear that if you look at the EV tariff regime, the lightest tariff is placed on BYD. BYD is probably the one that they need the most as an investor into the European Union because they need some of their technology and capabilities. Geely gets a lower tax because Geely owns Volvo, owns London Taxi. So Geely has significant investments in Europe. So the companies that already have made moves to Europe are given favored status. It's the other companies that have not proven themselves yet in Europe that are on the fence. Companies like MG, which is owned by SAIC, for example.
So those companies that don't yet have that presence in Europe, are they going to be a little bit hamstrung? Is it almost a case of too little, too late? Because we've seen the EV shift in Europe slowing.
Well, I think it's slow. It's slow because they're not democratized. They're too expensive. And that's why you need the Chinese supply chain. The world's biggest and most scaled market for EVs is actually able to sell EVs below 25 and actually in many cases below 10,000 US dollars equivalent. If you made them affordable, the more people would buy them. And I think that's why a move of China's supply chain closer to Europe is needed in order to achieve the decarbonization goals that electrification offers.
Right. I mean, the other side to the same coin, Bill. I mean, the Chinese word for opportunity is also the Chinese word for crisis, right? So cheap cars abroad, that's a good thing. But domestically, for example, they're just cutting prices to maintain market share. Do you see a bottom at all soon on these price-cutting wars in China?
Well, the price cutting in China is because this is pool play in the football game. It's the attempt to beat each other to try to eliminate some of the weaker players, and I think that's what's happening in China. In fact, the first shots fired in the price war were fired last year by Tesla, who I think Tesla and BYD now are the leaders in the EV race, and they're trying to squeeze out some of the competition. Another motivation for China to go outside of China is they get better pricing because there's less EV competition outside the country, and they actually get significantly higher margins from vehicles that they sell in the EU.
Bill, so I'll put you on the spot there. So this list of car makers, let's say there are 10 car makers in China. You mentioned some of the weak players. There's a lot of talk about the need for consolidation. Look at this list. Give me tell me what this list looks like in 5 years. Which car maker disappears from that list, Bill?
Well, I'll tell you who makes it. BYD, in terms of being global companies, BYD, Chery, MG, which is owned by SAIC, Geely. And interestingly, everyone I just named is not a startup. These are legacy car makers that have cash flow from their gasoline-powered business. They were making gasoline-powered cars before they made EVs. So there's this prevailing notion among investors that you have to look for the next Tesla. And in fact, in China, the companies that are leading the charge in the electrification race are legacy automakers. I would put a couple of other names on the list. Xiaomi, who just entered the market and are selling quite well. known for their handsets and their smart devices. And the other big name popular name in China are the extended range EV companies, which is Lixiang, Li Auto, and Huawei, which uses a brand called Aito for their products.
Bill, you've mentioned Tesla a couple of times. Wanted to get your views on those recent production numbers that we had from the company, a bit better than what had been expected by analysts. The stock surge tells us that some, at least, are saying it's out of the woods. But do you see that being the case for the company?
No, they're not out of the woods yet, especially in China. They're actually struggling with an aging portfolio here in China. The Model 3 was refreshed and hasn't really picked up significantly in sales since the refresh. The Model Y was launched in 2021 here and hasn't been updated. And I think to maintain their momentum in the market, they've had to go to a decrease in price. So whatever volumes they're hoping to sustain, they haven't been able to achieve them, and they've taken a margin hit. So they're not out of the woods yet. They do make more than 50% of the cars they sell globally are made in China, and the EU trade action does provide a 21% additional tariff on made-in-China Teslas, a lot of which are sold in the European region. So I think what will happen, a consequence of the tariff, is Tesla will have to rethink where they build their cars, perhaps prioritizing Berlin for the Model Y production.
Yeah, certainly a very delicate balancing act for Tesla, especially because it needs some support on the autonomous driving front. But that was Bill Russo there, founder and CEO of Automobility. And coming up, the PBOC takes a potential step to cool China's bond rally, tapping two of the largest lenders for its plan to borrow government debt. We'll have details ahead. This is Bloomberg.
All right, 2, 5, 10, and 30. No, we're not skipping numbers. That's the yield curve we're talking about. So we're looking at upside pressure a little bit on the 10 and the 30. Certainly the conversation this week has been the path lower is the easiest path to take, unless the PBOC comes in, of course, and steps in. In fact, more in the story, our Bloomberg scoop, that Bloomberg has learned that the PBOC is tapping two of the biggest banks in China for a plan to borrow more government bonds, a potential step toward cooling this market rally. Let's bring in our Shanghai Bureau Chief, Charlie Zhu, to talk us through this. Charlie, what do we know about this borrowing plan? What have they talked about so far?
Yes, so since the PBOC unveiled its intention on Monday to borrow bonds to help maintain what they call market stability, there's been a lot of speculation on who the PBOC will turn to for the borrowing. And naturally, state banks, those big four banks, especially including ICBC, are among the largest holders of, Chinese government bonds. So naturally, people, expecting the PBOC to, knock on the doors of those guys. So what we're hearing is, PBOC is in talks to ICBC and Postal Savings Bank, for to borrow bonds. As for the amount, we don't know yet. So in theory, PBOC, as a central bank, can intervene in the bond market, by selling and buying. But the reality, the problem, for China's central bank is it doesn't have a lot of government bonds on its balance sheet. According to some official statistics, it has only 1.5 trillion yuan worth of such bonds, and most of them is in short duration paper. So it doesn't have the right maturity or the amount, to make a meaningful intervention, and that's why they are borrowing.
Yeah, and actually just taking a look at that balance sheet, because as you said, it's got about 1.5 trillion yuan of government debt, maybe not the debt at once either. I think Postal Savings has roughly that amount. ICBC has about 5 times more in central or local government bonds. How big does its war chest need to be here, and how many other banks does it possibly need to tap?
That's a good question. We don't know yet because the PBOC hasn't shared any details about its borrowing plan. In future there might be more banks, more names of such banks coming up, who are willing to lend bonds to the PBOC. But as for why PBOC is doing this again, it's obviously they want Chinese banks to focus on lending, to bankroll businesses, help shore up the real economy. They don't want to see excessive speculation in the bond market, and also, too much speculation would, risk destabilizing the financial system. A lot of smaller banks in China, instead of lending to businesses, they have been, actually putting a lot of capital into the bond market, driving up bond prices, and that create asset, liability mismatch risks. And the PBOC obviously concerned, of a potential crisis that, would be similar to what's happened to some U.S. banks recently. So as for whether PBOC can successfully limit the bond yield decline, that remains a question mark. The problem is China's economic fundamentals remains really weak. People are not optimistic at this moment, despite all the easing measures they have been the PBOC has been putting together, implementing. There are still expectations that PBOC will further cut interest rates and also are in the second half, and that's why bond prices keep going up and stock prices remain bearish.
All right, that was our Shanghai Bureau Chief, Charlie Zhu, and thinking about bearish or things that haven't been performing very well. Well, Ning is obviously one of those names, worst performer, I think, on the Hang Seng last year. But now we've learned that the Chinese gymnast behind that brand, Ning himself, is considering raising his stake in the sports apparel company that he founded. That's to gain more control over the firm's future strategy. Let's get more on this scoop now and bring in our Bloomberg News deals editor, Will Davies. And Will, yes, we said Ning didn't perform very well. It hasn't performed very well against other apparel makers that have suffered, but definitely not to the same extent. Is him taking a stake going to be something that really moves the needle and turns the company around a little bit?
Well, yeah, you're right. I mean, it has been a very disappointing year last year for Ning. It lost almost 16 billion US in market cap. It was the worst performer on the Hang Seng Index, as you say, and it's carried on declining this year. It's another 20-odd% down, even though the Hang Seng is up about 5%. So it's still lagging. That reflects the sort of slowness of the Chinese consumer. And it's a disappointment for Ning, obviously a very iconic Olympic athlete. He cleared up at the 1984 Olympics. You might remember him from the Beijing Olympics opening ceremony. He lit the flame. And, this company he started in 1990 is very widely regarded. It must be stressed this is a very early stages, but, it's only considering this as a possibility at this point. But, yeah, he has only a sort of 10% stake at the moment, so getting a bit more control, low valuation, a lot of potential still. You'd think, hopefully, there'd be a recovery and, he'd have a bit more say in strategy of his company there.
If he had a bigger footprint. Do we know how much he's looking to increase that to? 10.5 to something? And how is he looking to structure this? He's talking to investors, private equity. Who's he tapping here?
Well, he has been speaking to private equity, so our reporting suggests. We're not sure how much more of a stake he'd be looking for. Still, like I say, early days, so it's just one to keep an eye on for the moment as he tries to sort of turn things around for this pretty iconic brand within China.
There we go. Will, fantastic. Will Davies, there are deals editor on the latest out of Ning. Actually, I remember this brand when I was studying in China. I think the tagline, because remember Adidas had impossible was nothing. I think this, if I remember correctly, this was 10 years ago. I think it was Meo Bu Kanang, which essentially effectively means like there's also nothing that's not impossible, it's possible. Just to show you, I guess, how far back. And I do remember, of course, what Will was saying, that he did light the flame, of course, in the Beijing Olympics. Anyway, some fodder for you guys. There we go. A market check just ahead. This is Bloomberg. Welcome back. You're watching The China Show. Some of the major corporate stories that we're tracking at this point. So, Bloomberg has learned that the EU is working on a proposal for import duties on cheap goods bought from online platforms outside of the bloc. Now, sources say the move would primarily target Chinese retailers like Shein, Temu, and AliExpress. Now, the EU currently has about a $161 duty-free threshold for online purchases that's meant for things like small gifts and personal packages. Right. JP Morgan's chief global market strategist, Marko Kolanovic, is leaving after 19 years at the bank. An internal memo obtained by Bloomberg says he's leaving to explore other opportunities. Now, Kolanovic had a disastrous 2-year stretch of calls on the U.S. stock market, staying bullish when the S&P tumbled in 2022, and then turned bearish as the market bottomed and eventually rebounded.
All right, let's take a quick look on the markets. And wow, it is a lot of green across the screen today that we're seeing. As we've been discussing, there is election risk, but what is really playing out so far is these expectations for Fed easing. It was a story of more bad news is good news. We saw weakness coming in the U.S. services sector, U.S. labour market overnight. So it tells us the stage is just being set for the Fed to shift lower at the end, possibly, of this year. That plays into the equity space. You're seeing dollar weakness, Asian currency strength, commodities are looking higher, and yields are pulling back. So certainly a lot to be tracking. Hang Seng Tech as well, one of the big outperformers so far in the session. So just really taking, or that turnaround continuing from Wednesday. More ahead. This is Bloomberg.
Welcome back. You're watching we're going into the second hour of the China show. Here's a look at how we're doing 30 minutes into the cash market session. We're just pushing, coming off highs on most, but we are pushing highs on some of these, some pockets of this equity market in Hong Kong. EVs are doing extremely well today, plus some of the big tech names, of course, Tencent, Alibaba. And by the way, that effectively applies to the other markets that are also tech heavy in the region, like Korea, and also Taiwan. Flip the page, please. We're looking at U.S. Assets quite closely at this point in time. Well, for one, given, of course, we are moving into a holiday, and second, we are moving into a holiday with a lot of headlines coming through out of Washington on, President Biden and his camp remaining steadfast, of course, that he still will be, of course, running and putting up a challenge against Donald Trump, although Kamala Harris, when you look at some of the betting markets in the last couple of hours or so, has seen an absolute surge in probability that she might actually get the nomination. So more on that in a moment. But as far as markets go, record on the S&P 500. Yes, we're pulling back in futures, and the VIX is extremely low and not really reacting to any of these headlines coming through. Bond futures, very quickly. The other big story, of course, in the U.S. is the Fed. Minutes out, extremely soft data. Soft ISM, softer dollar. We're looking at declines here, though, in bond futures as we speak. When you look at pricing around the Fed, we're looking at now almost 2 cuts price, or full 50 basis points of cuts price going into the end of this year. We mentioned Asia Pacific, so the Kospi index. Taiwan is doing very, very well. Within the Aussie markets, of course, this is big potential deal, of course, with Santos there and Aramco. 1% to the upside. Asia, on balance, trading at the highest level since Feb of 2022.
Yeah, let's get more on this now. Bring in Garfield Reynolds, who leads Bloomberg Markets Live Asia coverage. And Garth, how long do you think markets trade around this expectation of Fed easing? Because we're seeing it reflected pretty much in every single asset class today.
Yeah, Annabelle, I think that's going to be the case, until or unless the data turns. We do have... We've had a series of data prints that have come in softer than expectation. Citigroup's economic surprise index is plumbing fresh lows pretty much daily. So that helps to encourage those who are betting that the Fed is not going to cut just once, which is what the dot plots project, but that they will cut more than once. And in particular, too, there's a strong constituency that's been growing that they will cut sooner rather than later. Coming out of the more recent Fed meeting, the narrative seemed to be that they sort of expected they're probably going to cut rates, but it won't be until the end of the year because they need to be confident about inflation, and they're some way away from being confident. The minutes and some of what Jerome Powell said when he last spoke signals that they're on the path to being confident about being confident. But it's a far more gradual process from their point of view. from the market's point of view, they're much more interested in going, okay, when's the first cut coming and how many cuts are there going to be? And the data flow has been pushing them towards betting on cuts sooner rather than later and more rather than less.
Garfield, we were talking with UBS about an hour back, in fact, almost exactly an hour back, and we were asking, how they were advising clients to trade going into, of course, it's a U.S. holiday. We don't know. Well, the Dems have told us that it's still Biden, but around this just near-term uncertainty, how they're advising clients. I want to play that soundbite and to get your reaction on the back of that. They basically say gold. Let's split it out, guys.
We do think gold is an excellent hedge against the political uncertainties, against not just in the US, but also globally, Middle East, Russia. We see very strong structural trends. Central banks are buying, de-dollarization that is coming through. So gold definitely in a very sweet spot in this election. We're looking at the CNY, which looks very vulnerable from a structural perspective, and might be even more vulnerable if Trump gets elected, given tariffs and all the trade situations that we have.
Yeah, Garfield, I mean, gold as a representation of broader hedges going into this. Your thoughts on that?
Yeah, well, I mean, gold has been an outstanding hedge, this year against things like geopolitical uncertainty, de-dollarization trends, and also just the difficulty that everything else is falling against the US dollar. So, in fact, I took a look at a piece that came out earlier this week at the potential for gold to rise for the rest of this year, which is pretty strong because of a lot of the issues that your guest there mentioned. In particular, central banks are showing plenty of appetite for gold. There's also been signs at various times that, for example, individuals in India and in China have been very keen on gold. After all, the Chinese used to like to put their money into real estate as being a safe haven. That hasn't turned out to be such a great idea. So gold is attractive there. And I was also looking earlier today at the performance of the major currencies since since the day before the Biden-Trump debate, and in that period, the Australian dollar is the best performing of the major currencies, but gold has done even better than the Australian dollar. So, yeah, gold has proven to be, an outperformer in the first half. It's got a lot of reasons to be an outperformer in the second half, and yeah, the situation where markets are trying to game out, this uncertainty around the U.S. elections. And the more certain part of it has been a certain increase in the odds of Trump winning the election. That's very clear both from opinion polls and the betting markets. So in that situation and with the concerns that brings about potential shifts in policy or an exacerbation of the bias towards big spending by the US, all of that feeds into the case for bullion right now as good, in particular as a hedge. If you're worried that the election might blow up other parts of your portfolio, then a lot of investors are looking at gold as the sort of asset that is going to offer some protection in such an event.
Garfield, thank you. Garfield Reynolds there from our MLive team in Sydney for us. And really, among the key risks that we just outlined there, who is going to run for the Democrats, right? Is Biden going to step aside or is he going to stay in place? Let's get Jill Deeses here on set with us, our news desk editor. So what is the latest? Will President Biden step aside or he won't?
Well, at this point, he's saying that he's not going to step aside. We've just a couple of hours ago concluded this crisis meeting among not just President Biden, but also a lot of key Democratic stakeholders, governors from really prominent states at the White House. Really, truly kind of an unprecedented thing to happen here. But the big takeaway from that meeting was essentially that they're standing by the president. They're saying that he's going to continue to do this. All that being said, this does seem to be a very, very fluid situation. I mean, at this point, we're about a week out from that really, really poor performance in the debate last week against Donald Trump. We still see a lot of this clamoring, some panic among Democrats saying, is Biden going to step aside? Some reports about, whether Democratic lawmakers are considering making a push there. So it does seem like there's still a bit of fluidity in that situation. Of course, from the Biden camp, you've got some really, really key events that are coming up within the next couple of days. He's supposed to do this big interview with ABC News airing Friday night in the United States. We'll see what comes of that and whether he can really turn this around at this point.
That seems to be really key, that ABC interview and the sort of persona that he projects during that. Off the back of that, then, realistically, how many days do you think he has to convince people left?
Well, at this point, I think it really comes down to, what continued poll results are going to show, whether that's enough to sort of change not just, the opinion among a lot of key Democratic stakeholders, but also public opinions here. So we've just gotten off of the back of that debate performance some fresh polls within the past couple of days showing that actually not only does Biden trail Trump in a head-to-head matchup, but there's other Democrats that would potentially perform better, including his including Vice President Kamala Harris, who does have still trailing Trump a little bit, but at a lesser margin than what Biden would ultimately face here. I mean, we'll have to see whether or not this is something that is resolved in a matter of days. There's been in recent days some reports about whether, Democrats would want to consolidate around, a candidate faster. But ultimately, this at least on paper isn't resolved until the Democratic National Convention in the back half of August here.
That was our news desk editor, Jill Desis there, and you can read more on today's big take on Vice President Kamala Harris on the terminal and Bloomberg.com. As we said, it seems that really there's been a surprise resurgence in her popularity, and she could be seen as a genuine contender for the role if Joe Biden is to step aside. We'll have more ahead on the China show. We're going to be speaking to the studio behind the best-selling video game in the world. That's Minecraft, and we're going to be hearing from Åsa Bredin of Mojang Studios joining us later this hour.
Yeah, but ahead of that, we're back to geopolitics, or if you think about it, really gaming. The same thing. Vladimir Zelenskiy calls on China to play a serious role in ending the Ukraine war, even as Xi Jinping hails ties with Russia. Our exclusive interview with the Ukrainian president just ahead. This is Bloomberg.
Welcome back. You're watching the China show. Ukrainian President Volodymyr Zelenskiy says Republican presidential candidate Donald Trump should not wait until November after the election to disclose his plan to end the war with Russia. Zelenskiy spoke exclusively with Bloomberg about Trump's debate comments.
So let us imagine that the winner might be Trump in November, and he knows how to end the war. He has a plan. Me, as the president of a country at war, not a theoretical person, but a real-life person, I would like to be prepared. We are 40 million. We're a big country, and we really depend on the aid from the world. And we depend on the aid and the position and the stance of the US. So I would like to understand, what would it mean to finish war fast? Tomorrow, do we want the war to be over tomorrow? The war didn't to start. It was Putin who started it. But I hope you agree that it would be fair. If Trump knows how to end this war, he should tell us today, because if there are risks to Ukraine's independence, if there are risks that we will lose the statehood, we want to be prepared for this. We want to understand whether in November we will have the powerful support of the US or we'll be all alone.
And that was the Ukrainian President Volodymyr Zelenskiy speaking exclusively with, of course, our colleague Anne-Marie Hordern in Kyiv. Now, President Zelenskiy also in that interview told us that China could help end Russia's war in Ukraine. He says Beijing and Washington could act together should they choose to put aside their differences.
I would like China to play a serious role. It's a big country, and really it's the second largest economy, and Russia really depends on it because they don't have another place to export many of their goods because of the sanctions.
Meanwhile, President Xi says China is on the right side of history on Ukraine as he met with Vladimir Putin on the sidelines of the SCO summit in Kazakhstan. Let's bring in our Greater China Senior Executive Editor, John Liu. And John, it's the second meeting we've seen between Xi and Putin in just a matter of months. So how much does it tell us that the two countries or two powers are growing even closer together?
I think it tells us that Vladimir Putin and Xi Jinping continue to be very close. I think it tells us that the countries see eye to eye on lots of issues, including the war in Ukraine. I think we heard from President Zelenskiy there. He and other leaders in the West have tried to add pressure on Beijing to do what it can, if not to limit the supply of goods and support to Russia, then to actually take action to try and end the war. I think based on the meeting that President Putin and President Xi had yesterday, that pressure has not had a noticeable effect. At least in public, it has not had an effect.
Yeah, and John, I think where you are, I think it was last week that President Xi at a separate in a separate forum, of course, that took place there, also I guess underscoring this importance, pushing nations in the global south to do a little bit more, exert a little bit more of their footprint in terms of international affairs. How does this meeting fit into that broader strategy?
I think China views sort of global geopolitics through everything through a U.S.-China lens. I think that is the first and foremost concern for Xi Jinping, is how to deal with this brewing rivalry between Beijing and Washington. And when it comes to that question, I think China's partnership with Russia, China's growing partnership with the global south are part of the answers to how Beijing deals with sanctions from the U.S. and the West in general, limits on Chinese access to technology. All of those things China is trying to solve by growing its relationship with these other parts of the world.
And John, what else is on deck today at this at the SCO conference, SCO summit?
I think the addition of Belarus, I think hearing that Turkey is also interested in joining, I think those are important signals. It shows that there's this growing number of countries that are looking for an alternative to the system that's led by the United States and the West. They're looking for some sort of venue where they can have they can build economic, political ties beyond the reach of Washington.
Yeah, would become the 10th member of Belarus, of course, if that happens, as expected, of course. John, thank you so much. John Liu, our Greater China Senior Executive Editor in Beijing, for us there. Just ahead, doubts are growing, and this is a fantastic story. Doubts are growing over PwC's prospects in China, with regulatory troubles prompting an exodus of clients and also staff. More on that story just ahead. This is Bloomberg. Welcome back. You're watching the China Show. So yet recent regulatory issues and troubles for PwC in China have caused an exodus of clients, casting doubt over the firm's prospects. In the country, some of its accountants are also said to be seeking jobs at some of the company's competitors. Let's bring in Lulu Chen, who leads our Asia investing coverage on this story. Yeah, Lulu, I guess if people are just joining us right now looking at the story, just give us a bit of a background first, why we're here.
Yeah, well, PwC has lost more than 30 mainland Chinese clients since March. It all started when Chinese regulators started investigating the accounting fraud of China Evergrande, the developer that's now downfallen, and PwC was their an auditor for the company. So their role in the overstating of revenue and profits is being investigated. Bloomberg News previously reported that regulators are weighing a record fine on the company and also considering considering some operational suspending of the company and certain operations in the country.
So who sort of wins then from those, I guess, not only the companies that are dropping PwC as their auditor, but also perhaps staffing is what we can get to in a moment. But from the company side, are companies preferring to go to the Big Four auditors, or are they going to Chinese firms instead?
Interesting enough, it's a combination of both. So the other 3 Big Four auditors are winning clients, but also the local auditing firms have also picked up clients, and you can see that their revenue market share as a whole is growing. In fact, in the past few years, they're also trying to use this as an opportunity to poach some of the staff. According to people we've talked with, the other auditing firms have received applications from dozens of employees.
Yeah, that's what I wanted to ask about, actually, how many staff are going, but you don't know just yet, right? You're just getting this idea perhaps from recruiters and other firms. But what about the marquee clients as well? Has PwC managed to retain the likes of Tencent or Alibaba, Meituan? Are they likely to stick with PwC for now, do you think?
So those names that you mentioned, they're sticking with PwC, but we're also seeing that some of the SOEs have dropped out, and if they cannot stop this trend, reversing this trend, then it could be a problem down the road.
All right, that was Lulu Chen there, who leads our Asia investing coverage. Great scoop. We're going to have more on the corporate front as well, some of the stories that we're tracking this morning. And Bloomberg as well has learned that the EU is working on a proposal for import duties on cheap goods that are bought from online platforms outside the bloc. Sources say the move would primarily target Chinese retailers such as Shein, Temu and AliExpress. The EU currently has a $161 duty-free threshold for online purchases that's meant for smaller gifts or personal packages. South Korea has imposed a record $19.5 million fine for short selling across 2 Credit Suisse affiliates. It's the biggest penalty yet since Korea started targeting alleged short selling violations in 2021. Korea's regulator has extended its blanket ban on short selling through next March.
Right. Looking at some of the biggest gainers across this Chinese equity market right now. So as you can see, EVs are still holding the fort. We were up as much as 8-9% in some cases. XPeng, of course, which is leading the pack today. This is, being attributed to the fact that it did debut its new EV sedan. So if you're in the market for an all-electric special, the name is Mona MO3. That's the model that it's debuting. I think they announced this, if I'm not mistaken, yesterday. But in any case, of course, we're seeing shares there on the way up. We also have another step back piece here, citing data when you look at May. Market share. There we go. Okay, I'm losing my trail of thought here. In Europe, actually held up compared to where we were last year, amidst, of course, all the conversation. Now, that is, of course, ahead of tariffs kicking in, and we'll see, of course, how that looks like as we evolve into into that sort of threshold. Right. Some of these robotic stocks, let's flip the boards, please, if we can, and the conversation here around Tesla. Perhaps unveiling this product. This report, by the way, is really leading to some gains and substantial ones in related companies here as well. So up about in the order of about 2 to 6%. Right. That's one part of the equity market story. We're coming off highs, though, on a benchmark level. Hang Seng Index, HS Tech, we were up as much as 0.5%. On the Hang Seng Index, HS Tech was almost up 2% at one point in the early minutes of the session here. We have now completely reversed all the gains there. On the Shanghai Composite, and the Kospi Index going into its second hour of programming, as they say, 0.6%. Taiwan is still doing very, very well. And of course, we haven't even talked about this big deal over in Australia with Santos there, and of course.
Yeah, Santos, one of the names we're really tracking. It is
the Aramco story too.
Exactly, yeah. And of course, it's really a bet if you're positive on LNG over the longer term, and of course, a lot of different countries are. It's perhaps going to be the last fossil fuels standing, but certainly the story today, it's that expectation around Fed easing.
Yep.
That's really driving the dynamic across a variety of asset classes. We'll have more ahead. This is Bloomberg. It is 11:29 a.m. in Tokyo. You've got Japanese traders just 50 seconds away from going into their lunch break today, taking a look at what's happening across Japanese assets as well, and it is looking very positive, really, as we approach the midpoint of the session. Lots of different factors behind Japanese equities. You've got, of course, the tailwind from Wall Street, even though we had an early shut for the June 4 holiday. But playing into it is the expectation for Fed easing. You've got that yen weakness that has been a supportive factor for Japanese equities. And also the signs now that the rally is starting to broaden out, because you take a look at the topics, for instance, which is perhaps a better indicator of that. And you're trading at levels we had hit the December 1989 high. You're now moving above that as well. So it just tells you how much optimism that's extending into the second half, perhaps, for Japanese equities.
That's a good way to put it, broadening out, because it was the Nikkei we were focused on, last year. And certainly this, NT ratio, as they say, has come down, which is the relative outperformance of one benchmark against the other. And yeah, to Belt's point, right, 2882. So we were above that level, that on a closing level, I think we have it on a chart, 2884.80 was the exact closing level on December 18, 1989. Now, we were above that in the first 30 minutes of trade today. Not to say, of course, us pulling back means we've given up on that goal. But we have gone back to, we're back to the 80s, right, in Japan? Back to the 80s on the Topics Index. We're back to 1986 levels on the Japanese yen, for example. And I was looking at this too. The last time the yen was at about these levels was just a year, and this is how long this go back, was the year after Nintendo released, I think, the Super Mario Brothers 1, which was, of course, the flagship one up until recently was, if I'm not mistaken, the best performing gaming title. I'm just trying to stitch together some stories. This will make sense, I promise.
You're setting up an excellent segue if you want to head into it.
Why don't we do that? So in case you missed it overnight, the big move we had in the U.S., Chinese-listed stock in the U.S. was a firm called Douyi. It's a U.S.-listed Chinese live gaming streaming company. It's up 43%. It announced $300 million in cash dividends, special dividend included there. So in a statement, the company says it's dedicated to protecting shareholders' interests despite the challenging economic environment. That what actually played out very quickly, in the early goings across some of the gaming-related shares here listed in Hong Kong. This is, of course, a U.S. listing. Tencent is still slightly higher. Bilibili was up as much as 3% at one point. And it takes us right into this gaming conversation. In fact, let's stay on theme there. We'll take you back to Japan. We'll talk more about this Chinese gaming market. And, at this point, I want to bring in Sherry An, who I believe is a massive gamer herself. She's a co-anchor also as her second job of the Asia trade. And she's in Tokyo for us to talk us through her initial passion. Sherry.
I gotta confess, I've been caught in late night gaming myself from time to time. I've been able to rein it in being here in Tokyo, but you said it, we're talking about one of the most popular games in the world, if not the most popular. We're talking about 300 million copies having been sold, the most watched YouTube content ever. Minecraft, and I know the players out there will be very excited. We have the developer Mojang Studios head with me, Åsa Bredin. Great to have you here with us in Tokyo.
Great to be here.
And it's such an interesting move to come here in Asia because, of course, we have seen this incredible, interest when it comes to Minecraft in the region. Yeah. In a country where foreign video games have not been necessarily that successful, what level of interest are you seeing now?
So there's lots of interest here. There are lots of streamers, and we have very passionate players also here in Japan. And I think for myself, just landing here in Tokyo, I met the person with the Minecraft shirt on first thing. So we know that a lot of the players are excited to see our new content when we have our Minecraft live show streamed on YouTube. Japan was the top country in terms of viewership.
Oh, wow.
So we know we have a very, very passionate following here.
And it's not just Japan, right? I mean, you also have a China edition, although I wonder how you're dealing with some of the crackdown that we've seen from the government as well.
So in China, we work with NetEase as a partner, so they help us with the local markets and run that. And we have 700 million players registered there, also loving the game.
When it comes to growth in that country, though, what is the prospect in the Chinese market, especially when we're not quite sure about the regulatory uncertainties?
So I can't answer on that. That's why we work with NetEase. So they help us with the local market, and that's their key, skill to understand that local market.
So it was really the concern from authorities about the impact on children when it comes to gaming, right? At the same time, we know that we have really young people joining the Minecraft world. And not just that, people who have grown up with Minecraft as well.
Yeah.
How do you really moderate this sort of virtual world when you have children alongside adults?
So safety is a core principle for us for the reasons you mentioned. We're a game for all ages, and we want it to be very open and really allow everyone to express their creativity. So what we do is we lean on also on Microsoft and the Xbox parental controls, so parents can also monitor and help their children set up accounts. But then we also have a lot of tools built in, such as like abuse reporting. We also have chat moderation. So we have a lot of tools to ensure that safety.
And when we talk about Minecraft, we really have to expand our conversation to all of the different things that you're doing, including players being very excited about the upcoming movie, not to mention Netflix animated series as well. So when it comes to the studio itself, how much do you focus on your core games as opposed to everything else that you're doing? Where is the focus?
So at our heart, we have the core Minecraft game. That's what's powered this whole franchise. So that is key to us, and we are going to continue to evolve and build that game for our players. It's a great game, but our players love the additions.
Is that where the growth will come from in the next few years?
So we're doing that, but we're also expanding the franchise. So we want players and fans to have different opportunities to interact with Minecraft, and that's where we're expanding, like you mentioned, into the entertainment space. We also have our consumer products like clothing, there are books, there are a lot of things that you can be part of the franchise even if you don't play the game.
When it comes to producing this content, whether it's video games themselves or just entertainment as well, completely being impacted by artificial intelligence and the growth of this sector, are you seeing that impact on Mojang?
So AI is an amazing tool, and I think we'll see lots of development in that space going forward. So for Mojang, what we've really seen, one successful application is in the Minecraft education offering, where teachers can go in and get really great support in building out the curriculum for their students using Copilot. So they can say they want to teach their students around like a topic like space and get a whole curriculum built out together with that AI support, which is amazing.
I've really heard a lot about how really Minecraft uses education in order to engage children. But as head of the Mojang Studios, I wonder if you're thinking also about the business aspect of artificial intelligence, streamlining your business, making production of content cheaper.
So for us, it's really an art to build a game like Minecraft. It's a lot around the creativity, the design, and the actual art in the game. So our talented teams will continue to have that core focus. AI supports us when it comes to tooling. For instance, we use it in our chat moderation tool. We have AI support to help us really make sure the players stay safe. But when it comes to the creativity and the innovation around the game, that's really our amazing teams.
Do you feel that at some point, though, it will start affecting headcount, especially since we're seeing layoffs in Activision and other places as well?
So for Mojang, we're still hiring. We're a growing business. So that's our focus, to really continue to grow the business.
Do you feel that the industry, though, overall, will see a change in how it does business? Because there has been a lot of criticism, too. The production costs may have risen too fast, that there needs to be some restructuring of the industry itself.
I think I don't think this is different from previous years. We always evolve and improve. That's, I think, part of any business, to always try to improve how you do things. And AI is a new tool, so I think we'll see in the future how we can utilize this in a good way. But I think that's still to see.
What does the future hold for Minecraft, for Mojang Studios? I mean, this is your 15th year, isn't it?
Yeah. I mean, for us, it's been an amazing journey up until these 15 years, but we wanted to continue to grow our franchise like 10, 15, 50 years into the future. So we're only getting started. We're going to continue to grow.
When it comes to the ecosystem, it's all of that merchandising, plus the spin-offs, plus movies, entertainment.
Yeah, all of that, and continuing with the core game as well. So it's all of that.
What about competition?
Yeah. I mean, the gaming industry is growing overall, which is amazing. I think a lot of players play several games, and I think that's how players work. So for us, it's really to continue to develop Minecraft in the way that we think is right, because we've seen now in 15 years that we've done a good job so far. So I think we want to continue to keep the essence of Minecraft true to what it is, but still develop it together with the community. So we get lots of feedback from our player community in terms of things they want to see in the game and how we continue.
Also, Bredin, really great to have you here with us in Tokyo, head of Mojang Studios, of course, talking about that best-selling video game Minecraft over the last 15 years. Guys, back to you.
Thanks, Sherry. Yeah, great interview there. And of course, if you missed any of those informations that we got there from Mojang Studios, you can go back to the terminal, watch it. If you're a Bloomberg subscriber on our interactive function TV Go, you can also join the conversation by sending instant messages to our team and our guests during live programming. Check it out at TV Go. This is Bloomberg. Alrighty, taking a look at how Santos shares are performing today in Australia. You're seeing those jumping more than 4% so far. We actually had a Bloomberg scoop on this. We were the first to report that Aramco and Adnoc could be looking at potential bids for the Australian gas producer. It could be one of the biggest M&A deals globally this year if it goes ahead. Let's bring in actually the reporter who's behind this scoop, senior energy reporter Stephen Sapchinsky. And Stephen, talk us through the details here. As you said, this could be a really big deal.
It could be, but, you know, I do want to preface this that it's still early days. You could describe this as sort of kicking the tires. Aramco and Adnoc are very interested in expanding their liquefied natural gas portfolio, especially in Asia, where gas demand is expected to boom over the next few decades. Now, Santos, an Australian company, has investments in LNG plants in Australia and Papua New Guinea, and they're an attractive takeover target. They have been for a number of years. A few years back, they rejected a takeover bid, and in December, we also had Woodside, Australia's biggest LNG exporter, also having preliminary talks of potentially taking over Santos. So this is part of the strategy by Middle Eastern companies to shift away from their dependence on making profits from oil to gas, which is still a fossil fuel, but cleaner burning than both oil and coal, and something that the region especially is looking at as a bridge to a cleaner future.
Yeah, and Stephen, I mean, you mentioned there that this company has been an attractive target, and I'm wondering why that's the case. I mean, some things are cheap for a reason, for example, and I'm wondering why this stock isn't trading at much higher multiples than arguably should be, given, of course, we are moving into a future of more demand for gas, for example.
There's been a few reasons. Shareholders have complained over the last year that Santos isn't providing enough rewards to the investors. They're not putting more back towards shareholder returns. They've been sort of spearheading a ambitious growth strategy, continue to push forward with potentially expanding gas production in Australia as well as other places. So that's one thing. The shareholders haven't seen the really good dividends that you've seen from other oil majors in other parts of the world. So that's one reason. Another is you also look at how they've been able to unlock their portfolio. They don't quite have as strong as an LNG trading desk or a gas trading desk as potentially a Woodside or a Shell as well. LNG and gas trading makes a lot of money, and that's been one area that Santos, among other companies, has struggled to really expand into as well. But I think there's also the view that unfortunately, you had the big energy crisis in 2022 when prices boomed. And since then, companies are now dealing with, hey, prices are going to be lower for probably a little bit longer, especially as there might be an LNG glut by the end of this decade. How are companies dealing with that as well? That's a problem not just for Santos, but for everyone across the board that are very gas dependent. And I think some investors are looking at the CEO, Kevin Gallagher, and saying, what are your succession plans? You've been there in the spot for a long time. Who's going to take this ship as we go into a period of a gas glut when prices are going to be lower for longer? And how are you going to weather that?
Yeah, so what's the path ahead then? Because definitely the management of the company is under pressure to try and fix that share price. It's obviously a little bit challenged. Is there any sort of clear path ahead, and is there the potential perhaps that they do just split off the LNG assets instead?
Yeah, I mean, I think certainly M&A is a fantastic option for everybody involved, and that's why they're in talks with many players beyond just Adnoc, or rather, that's why they would be in talks with potentially many other players, right? Aramco and Adnoc aren't quite in talks yet. They're going to offer the bid. They're still kind of looking at the situation, but they have been in talks with Woodside and others in the past. Of course, any sort of sale or any sort of future would want to look at the attractive assets, which are LNG. They do have a place, for example, I'm just going to look at Papua New Guinea. They have this facility that's been operating for over a decade. There's also potential to expand that. Total Energies is looking to expand their exports from Papua New Guinea, and Santos would immediately benefit from that. That's one of the reasons why Woodside found them so attractive, is because they have this growth potential. Now, the Woodside talks didn't work out, but for anybody coming in here, that's something that they're going to be looking at. How can we unlock more value here? And that value is growth, and that growth is in Asia and to selling to gas consumers in the region.
Stephen Stapczynski there with that fantastic scoop. Early days, of course, around that conversation. Right, plenty more ahead. Market check, plus we're looking at currencies as well as we move into, of course, keep in mind UK elections are also on deck today. Plenty more ahead. This is Bloomberg.
Japanese conglomerate Hitachi says it's ready to spend hundreds of millions of dollars on acquisitions. Chief Financial Officer Tomomi Kato told us exclusively that the focus of the deals will be on AI and green energy.
We have three major sectors at Hitachi, including our business sector, in which we develop software. We are developing software for our customers, and of course we do the programming and coding. But we've learned through various demonstrations last year and this year that on average we can improve the efficiency by 30% or so, and we're now trying to incorporate this into our projects. This will help reduce the time and people needed for project development. If we had more human resources, we would be able to meet customers' needs better. But if the productivity of coding is increased by the use of AI, we can take more orders and help customers looking to digitalize operations.
Which is why you're training 50,000 employees for generative AI as one of your business strategies. When do you expect all of this to start paying off in terms of, as CFO, when will it start affecting the bottom line?
I believe that we will see the effects of the return on investment starting this fiscal year. However, since it hasn't been long since the program began, the effect will be minor, and the bigger impact will come from the new medium-term management plan that will start next fiscal year.
How are you expecting those partnerships that you have with the global AI players like Microsoft and Google to factor into those calculations?
We are in the digital business, so we have customers who want to use AI but don't know how to use it, or what's the most efficient way to use it, or they want to use it but they don't want to release their confidential data to the public cloud, for example. How do we guarantee security, and how should we use the public cloud and on-premises servers, which we call a hybrid cloud? In this case, we need technology for data management. To achieve this, we of course have the technology, but for example, we do not make our own large language models, but use LLMs made by other companies and train them to become suitable for our customers and for us. In that sense, the alliances we have with Microsoft and of course NVIDIA, whose servers are crucial, are not only beneficial to us, but are also very effective in providing various solutions to our customers. I think this will help distinguish us from the competition.
The fact that we're seeing such growth in artificial intelligence and the infrastructure that might support the future, Hitachi having businesses across all parts of the economy, including, of course, a power industry, are you factoring in that as CFO when you're looking at your numbers?
The effect of generative AI is extremely high in enhancing our productivity and the solutions we provide to our customers. As you mentioned, for example, the use of generative AI naturally requires data centers, and the demand for these data centers is increasing. Data centers require electricity, which in turn requires transformers and other power equipment. We have a business model called Power Grid in the green energy and mobility sector, where we also manufacture transformers, and orders for these transformers are also increasing. In this sense, we believe there will be a ripple effect from AI to data centers to the power grid.
And that was the CFO of Hitachi, Tomomi Kato, speaking exclusively with us, of course, at Bloomberg. Right, just a brief market check right now. So Asian equity markets are doing well, although coming off highs of the day. We're also looking at the pound, obviously, given, of course, the events over the next few hours or so. Implied vol is actually on the way up, as you can see, more than a few points. Takes us back a few weeks, unsurprisingly so. By the way, you can check out on your terminal for more coverage, of course, of the upcoming elections in the UK. Turn to your Bloomberg terminal. That's on TLIV Go. Of course, commentary and analysis from our expert editors here. That's it from us here on the China Show. We'll see you guys tomorrow. This is Bloomberg.